Kia ora, I'm David Chastain with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news weakish Chinese data is hurting commodity prices. But first up today, American initial jobless claims rose last week and by more than expected. They rose 234,000, so there are now 1.67 million people on these programs. Seasonal factors should have seen these initial claims fall, so the rise is probably the long-awaited start of the softening of their tight labour market. Meanwhile, American producer prices rose at a reduced rate. They're up only 2.3% from year-ago levels in April, which is lower than the 2.7% rise in March. Even the annualised rate from March to April was only 2.4%, so cost pressure is evaporating quite quickly there now. In Los Angeles, shares in another regional bank, PacWest, dropped by more than 20% today, compounding earlier falls. Today's fall came after they said its deposits declined and it had posted more collateral to the US Federal Reserve to boost its liquidity. Of course, the regional bank woes, annoying as they are minor compared to the threat their federal debt ceiling standoff poses. In China, they don't have an inflation problem. They might be facing a deflation problem. In April, consumer prices were up only 0.1% from a year ago, much lower than the minor 0.7% in March, and also below the expected 0.4%. That is a 2-year low, down to pandemic levels. And your annualised rate between March and April was a deflationary 1.2%. Lamb and beef prices are falling, but milk prices are rising. However, none of these changes are large. And staying in China, their producer prices are definitely deflating. They were down 3.6% in April from a year ago and falling at an annualised rate of 6% in April from March. No hiding deflation there. In Australia, their inflation expectations picked up slightly to 5% in May from 4.6% in April. It is not something the RBA will be pleased about. Some think the federal budget will be inflationary too, so the tide is challenging the RBA. The US Treasury 10-year yield starts today at 3.4%, down another 5 basis points from yesterday. That puts it back to week-ago levels. And the price of gold will start today at $2,011 an ounce. That's down $20 from yesterday. And oil prices have fallen another $1.50 from yesterday to be just under $71 a barrel in the US, while the international Brent price is just under $75 a barrel. Downward pressure is strong today in the oil price. And the Kiwi dollar is a half a cent weaker against the US dollar now at just under 63 US cents. Against the Aussie, we're a touch firm at 94.1 Australian cents. Against the euro, we're marginally softer at 57.7 euro cents. That all means our trade-weighted index is now at 70.9 and 30 basis points lower than this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chastain. That was 90 at 9, brought to you by interest.co.nz.